problem is most people over intellectualize markets. They're highly psychological. Investing is not like it is a mathematical financial thing, but it's ultimately, if you don't understand psychology, good luck. Like seriously, good luck.
If you are an Empire listener, hopefully you've played around on chain. And if you have done that, you know that transferring assets across different chains is a pain, to put it nicely. That is why we are incredibly excited to have the Wormhole Foundation as a partner of the Empire podcast, stewards of the Wormhole protocol, supporting over 30 different blockchains and 6 different runtimes. Stay tuned later in the show. We have a cool thing that you can claim, which is a Wormhole NFT just for Empire listeners. This episode is brought to you by PayPal. Here at Empire, you know that Santi and I are really into real-world use cases and always on the lookout for the next killer blockchain app. We're excited to share that PayPal has arrived in crypto to unveil a way to seamlessly connect fiat to digital currencies. Later in the show, you will find out how you can use PYUSD to check out at millions of online stores. What's up, everyone? Happy Friday or Saturday or Sunday, whenever you're listening to this. We got Santi and we got special guest, Mr. Matt Fiebach from Blockworks Research. Santi, Matt, welcome to the show.
Thank you.
Thanks for having us.
It's great to be here.
It's great to be here. It is a glorious day to be here, or as the bad kids like to say, it is a bad morning. So, what's going on? How you doing, Santi?
I'm doing great. I'm excited because Matt, as you described him, he's the brains behind Blockworks Research. There has been a lot of controversy on Twitter recently, a particular project out there that reminds people of Terra. As always, crypto Twitter always has very uninformed opinions, and has very visceral reaction to certain ideas, like Blast. So now Blast, people seems to be coming around to that project. Lo and behold. So anyways, I think, crypto is a very interesting ecosystem where it's very vocal. There's a lot of noise, and people tend to make up their minds very quickly on certain things, and then they have to revisit and chew glass a bit. But thankfully, we have Matt here, who has more informed opinions than 99.999% of crypto Twitter. And so hopefully in this episode, we can get kind of like more into the weeds of like some of the mechanisms for and the project we're talking about. Matt, you can fill us in here, but it's Ethena, right?
Yeah.
And so people can, obviously it's very topical. So we could start there. There's a lot that we can discuss, but really excited for the pod.
Yeah. So I want to talk Ethena Labs with Matt. I also want to talk, there's a little bit of drama with, so Aave's risk manager the last couple of years was Gauntlet, and they announced that they're stopping work with Aave. You don't really see this that much. It's kind of like the analogy I would use would be like a consulting firm firing their client or a SaaS provider firing their customer. I'd love to get Matt's take on this.
You would go as far as saying the auditor stopping auditing a particular firm.
I didn't want to say that because that implies a certain underlying risk.
It's not. It's an unfair comparison.
Yeah.
You almost, it makes you wonder if it was Gauntlet that terminated the relationship or Aave that terminated that relationship.
Yeah. So we'll get Matt's take on that. Whole bunch of other stuff. AI coins are ripping. Santi, you had an interesting poll about what's going to outperform. Is it NFTs? Is it whatever? And at the time, NFTs were the lowest voted on thing. And I said, feels very obvious. I think NFTs will outperform the rest of the market, and got a bunch of funny comments in my DMs from that. So maybe we can talk about that. But before we do that, we are hosting an Empire listening party at DAS. We got Santi to fly in for DAS. Got him to change his flight, and he's coming. So Wednesday, 6 to 8 p.m.
The amount of nightmare folks, you better show up to this goddamn thing.
Yeah. If you're coming to DAS, here are the requirements. If you're coming to DAS and you're an Empire listener, and how can we verify you're an Empire listener, you might ask? We can't. It's a trust thing. So you have to be an Empire listener. But we can
I don't know
verify.
about you, man. I'm gonna be in the fucking door. Just show me your Spotify 2023 top podcasts. If Empire's not in one of those,
yeah, exactly. Yeah,
good
show
luck
me your
trying to get
Spotify
in.
rap, baby. So
we
but
should
we can
throw an
verify
Easter
that
egg in. We should throw an Easter egg in some of these episodes. Be like, what is the code?
The code. Yeah, exactly. The code is bald. You have to say bald at the door, and only Empire listeners will get it. So yeah, but we can verify that you have a DAS ticket. So go get your DAS ticket. We hit a big milestone today, which is we just sold our 1,000th DAS ticket. We have 1,000 tickets. Our ticket goal and registrant goal for DAS was 1,200. We're going to rip past that goal, it looks like. I would guess we'll end up around 1,500 or 1,600, which means the hotel or the Hilton where we're hosting it is going to shut us down from continuing to sell tickets. So we're going to at some point soon have to shut down ticket sales.
Actually, I have a free ticket to give out, so maybe I'll do something special about that because I don't have anyone else to give it to. But hey, maybe this is a good opportunity to, if you're listening out there, maybe the most creative comment on Farcaster will get a free ticket. Because I, as a speaker, right, I get a free ticket. Maybe I'm not supposed to say this, but I do. But anyways, maybe the most creative comment on Farcaster will get this ticket on me.
Sure. I don't even know how you have a free ticket, but yeah, sure.
At one point, you wanted to charge me.
That's fine. Sure. Whatever you say, Santi. All right. So let's
we may have to edit this up.
Let's get into Ethena Labs. Okay. So Ethena Labs. Here's the TLDR on Ethena Labs. It is you know what? I'm not even going to try to do this. Matt, give us the TLDR of why everyone is talking about Ethena Labs this week and what happened. You don't need to go into too many of the details on how it works. I'll kind of pull that stuff out of you. But what happened with Ethena Labs? What was their fundraise? And like high level, what is Ethena Labs?
So Ethena Labs has launched the newest stablecoin to the market, USDCE. They've immediately hit their cap of 100 mil in TVL, so 100 mil USDC outstanding. It's a really interesting project, and it's offering something like 27% yield. So there's a narrative going around like, is this the new Terra Luna and things of that nature? So it's kind of caused this huge stir on Twitter. It is not the new Terra Luna. It's employing a pretty interesting strategy in order to actually get that yield back to its holders. And it's a really cool team, and they're building something pretty awesome.
Okay, so
is it a stablecoin though? My understanding was they don't market themselves as a stablecoin. It's sort of a tokenized hedge fund that is playing like a basis trade.
Yeah, so the way I look at it, it is a kind of a yield vault wrapped in a stablecoin narrative. So we've seen like yield vaults in the past have all kinds of strategies, including some actually deploy the same strategy that Ethena is deploying. So that's like a delta neutral strategy where you hold a long position, you hold a short position so that you're not exposed to the price, but maybe you're getting a carry or an interest rate from something like staking ETH or from being short perps, which has a negative funding or has positive funding rate, which returns yield to shorts. So Ethena kind of looks very similar to those yield vaults of a past era, but wrapped in this stablecoin narrative where actually if you deposit into the vault, you receive this USDCE stablecoin collateralized by those positions.
So there's two products here, right? There's USDE, and then there's SUSDE, is my understanding. So USDE, and maybe we can walk through both of those. So USDE is just the stable coin that's pegged to the US dollar, basically. It is a combination. The way they do that is a combination of staked ETH and perps to maintain the peg. And then there's another product, which is SUSDE, the E being Ethena, the S being staked. So SUSDE, that generates yield, kind of like a traditional bond. And I think a lot of their marketing was like, we enable the internet bond. My understanding is USDE is backed by basically, you've got staked ETH deposits and short perps positions. And then those two assets kind of work together to fully collateralize the value of USDE. And that kind of keeps the total value stable. Can you maybe give us a better explanation than I did stumbling over that, Matt?
Yeah, sure. So maybe it would help to explain kind of the life cycle of how you get to SUSDE eventually.
Sure.
So it starts with market makers. Only whitelisted market makers are actually allowed to mint this USDE token. So what they do is they go and deposit a staked ETH asset, a LSD. So something like Lido staked ETH or Binance staked ETH, and they deposit into the protocol. Ethena then goes and holds this position on a centralized exchange like a Binance or an OKX. I believe they have 5 exchanges that they're currently using to hold their collateral. They actually have a custodian, Copper, who is holding the collateral that's not currently being used, but at the end of the day, it does end up on these exchanges. They use this staked ETH as collateral to then open a short position. So let's say, you're a market maker, you put one ST ETH into Ethena, you get, let's say ETH $3,000, you get 3,000 USDE. At this point, Ethena takes that one staked ETH, and puts it into Binance. they then open a short 1 ETH position against that 1 ETH collateral. So now whether ETH goes up or down, it doesn't matter. The price, there's no price exposure anymore. If it goes up, the price of the short loses value, but the ETH gains value. Likewise, if it goes down, the short gains value, but the ETH loses value. So you're what's called delta neutral at this point, and that's what's collateralizing that one USDe outstanding. Anyone who has USDe can then go stake it with the Ethena protocol to not only get yield, so the yield that's the result of both the staked ETH yield, which is 2.6% or something like that, as well as the yield from holding those short positions, because right now the funding rate in crypto is really high. So shorts get paid a lot to hold their positions open. But additionally, you get shards, which is like Athena's version of points, with speculators thinking that there'll likely either be an Ethena governance token airdrop or maybe even a USDC airdrop at some point.
How scalable is this model? I mean, and can it work in all kinds of market conditions? Meaning, your point is a good one, which is now you're getting paid a lot if you're going short. It's no like reverse this model or implement this model 9 months ago. Can it work?
Yeah, so that they have pretty good back testing data on their website, and it actually can work. But Athena already makes up 5% of total ETH open interest, which as that number scales, likely the funding rates will come down, meaning those short positions will get paid less yield from their funding rate. Funding rates will come down, and the token will have less yield. Additionally, it's really only in a bull market that we see these egregious annualized funding rates where something like 20, 30, 40, even 60, 70% is paid annualized by longs to hold their positions open. So the answer is it's a lot tougher to have this type of product in a bear market. And then additionally, even in a bull market as it scales, once it gets to, in the billions, it likely will no longer have that same type of return that it does today.
So okay, so the yield right now is 27 or so. People are like, okay, that's they don't know where the yield's coming from. You're the yield. So that goes down. Is there a point where the yield reaches a certain point where it no longer is interesting, attractive to people? And I guess then that mechanism sort of people leave, and then there's sort of like a natural equilibrium where the yield kind of settles. And do you have a sense of where that could be? Is it 6%? Is it 8? Is it
So
staking plus?
there's a few things to keep in mind there, which is one, there's a risk that the staked assets depeg. So stETH isn't actually completely pegged to ETH. There's also risk in the exchange, in the custody, in the custodian, so in Copper, and there's also risk in the exchanges. So you have to price these risks in. From my perspective, and the way I look at it, maybe like something like 5-6%. So it's definitely not zero. There is risk in in using this protocol, but the yield is very promising. Another aspect of the yield is from the inefficiency in the funding rate market. So funding rates aren't equal across all exchanges today. That's likely because not all high value market makers are plugged in across all different exchanges. So Athena will actually help these funding rates become more efficient across different exchanges. Additionally, the yield is actually far above 27% right now because only half of the USDCE is actually staked. So it's almost double that. It's worth noting that's that's annualized based on the last week's data, and funding rates change every hour. So it could be drastically different than that in reality. I would say if the funding rates came down, or sorry, if the interest on SUSDE came down below 10%, it now starts to become like, is this really a positive EV? Is this really a good expected value versus the risks that are involved? But whether or not the market really cares about that or just cares about getting these points, that's definitely up for debate.
Matt, can you explain just funding rates again for people who don't know what they are, and like just what are funding rates in crypto?
Yeah, so perpetual futures are a novel instrument in crypto. It's really only predominantly for crypto assets that this type of derivative trades. If there is a aggregate long bias amongst traders looking for leverage, so if more traders out there want long leverage than short leverage, longs have to pay shorts in order to hold their longs open. Likewise, if there's more interest, if there's more volume looking to short an asset than long an asset, shorts have to pay longs, and the funding rate's paid at an hourly cadence. So when you look at Ethena and they say, over the last week, the average funding rate has been 27% annualized in our favor. Really, what that means is taking every hour over the last 7 days and then annualizing it over 365 days. That's 27% longs are paying shorts to hold those longs open.
Okay, so funding rates are the fee that perps traders need to pay based on the kind of sentiment to the market. If more traders are bullish and are long, they are paying the short traders a fee, and obviously vice versa. So in this current environment, ETH, the other thing that happened this week, ETH hit 3K or touched up on it. So traders are very bullish ETH, which means the funding rate is positive, which means that the long perps holders are paying the short holders here. And right now, the rate, what's the funding rate? Like 20% or 23% or something?
It's different across exchanges. Like on Binance, it's about 11%. So longs are paying shorts about 11% annualized. But if you go look at an exchange like DYDX, it's closer to 80%, or Vertex, or some of these
Okay.
dexes.
So when I see on Ethena that I'm getting, this 27% number, that's basically you've got a 4% yield coming from staking yield, which is like the consensus rewards, the execution level fees, and the MEV block builder bids, and that's 4%. Then there's another 23% coming from the funding rate. And is it right to say that Ethena gets that 23% because the longs are paying Ethena due to Athena's short positions?
Correct.
Okay. Got it. What happens if sentiment shifts bearish? Like I think Santi was asking about 9 months ago. So if let's say, so this, I have a feeling Athena's going to rip, and next 18 months Athena does super well, but then one day sentiment changes, we go into a bear market, funding rates flip. What happens to this at this point?
So we actually have a report on Blockworks Research where we do a lot of back testing of different perps over the bear market and the funding rates to do with those perps. I believe it's called basis trading. If you search up Blockworks Research basis trading, will pop up. Historically, even in bear markets, funding rates do trend positive.
Yeah.
And so likely, if Athena didn't have $1 billion, it would still be a profitable strategy. But likely they may think that the caps that they're able to deploy during a bull market, meaning, right now the strategy is highly scalable. So if it grows too big in a bear market, it could have a large implication that, maybe funding rates would be negative in the bear market. And all of a sudden, now Athena is actually losing money to hold these positions open.
That's what I want to explore because
Yeah.
so funding rates, to your point, are not homogeneous, like standardized across exchanges or decentralized protocols like Vertex and others. Um, so they're quite different in the way they're calculated, which is not so much of an issue. I think now you're going to have a pretty big buyer, constant buyer of these things in the market, which is going to be this project. Um, what's the worst that can happen in your mind? Is it that the centralized exchange risk is real? The counterparty risk somehow, like that part of the equation breaks down, or is it like I'm less concerned about the model becoming like less attractive because in a world where people, for instance, if yield comes down to 7% to a point where people just feel that it doesn't compensate for the risks out there, what you will see is like demand go down and then natural yields would go up, presumably, right? I mean, there will be a clearing rate. The market sort of will figure that out. But the issue, for instance, with Terra was you had what was marketed as a stable coin that, was, you know, the way I think of it is a lot of people came into the house. They wanted to play in this yield and capture, do a lot of this ARB and anchor or whatever. Size of the door didn't grow. So the minute some people started to want to exit, and it happened all at once, the way these things typically do in a bank run type of situation, that's where you have the issue, where people can't get out, people can't redeem, and then it depegs, and then it has a downward spiral. That is not the case here, right? Like,
Yeah, correct. I think, there is some negative encumbrance as far as, winding down positions incurs fees. So, everyone leaving at once does mean it's not positive for the protocol, but it's not like this huge lack of liquidity or this huge event that absolutely destroys the protocol. So you ask like where I see the largest risk, it's not in funding rate switching. Like, yes, that's a risk, but like you said, I think that the market hopefully will be somewhat efficient there. The big risk is in counterparty risk. So they're holding a lot of funds on exchanges. Like, it's diversified across 5 exchanges, but likely if the funding rate on one of those goes super positive, meaning it's really profitable to hold a short open there, they'll put more funds there. As we've seen in crypto over and over again, even the most trustworthy exchanges do have risk. Like there's no other way to look at it besides there is risk in holding money on centralized exchanges. Likely in the future they'll also hold money on decentralized exchanges, given that the funding rates there are even more promising and fruitful. So definitely from my perspective, that's where the largest risks are involved. Using copper as a custodian does help, but it doesn't completely alleviate that risk.
Mhm.
And so that's where I would see the biggest potential concern as a holder of USDCE.
When they try to implement this strategy, you mentioned there is a scenario where they lose a pretty significant amount of money if they don't do this efficiently. Um, is that a function of as they scale, it becomes harder and harder to implement the strategy, and so, um, and other people are actually seeing what they're doing, so they can, and so would it? Can you walk us through kind of the scenario where it starts becoming unprofitable because there's a huge fluctuation in the funding rates or whatever, or they need to unwind these positions fairly quickly, so they kind of exit in a very unorderly manner? Like, the protocol there would incur some bad debt. Are are like the users also gonna kind of like participate in that downside, or is that gonna come from an insurance type of fund? I'm curious how that would work.
So I literally heard today that they are increasing the insurance fund take rate. So there is an insurance fund take rate. It's extremely small right now. But given that the yield might be as high as 40% this week for SUSDCE, annualized that is, they've decided that I think 50% of the total yield will actually go bootstrap an insurance fund, which I think is an extremely smart and important decision, because it is very much possible that that is a scenario that could occur. Funding rates flip against them and they need to unwind the positions. It's not like all of a sudden there's a huge hole in their balance sheet, but it does mean there's a scenario where not every USDC is completely backed by $1. So bootstrapping the insurance fund is awesome. And given that the rates are so high right now, likely they can get it to a very healthy position where that risk is mostly mitigated.
Mm,
Um, so yeah, I think that it's a good decision, and there is an insurance fund that will help take on some of the risk. Where there's one thing that comes to mind is
mm.
because funding rates change hourly, even if a funding rate flips against them for 1 hour, meaning they have been open short and the funding rate goes negative, so they have to pay to hold that position open, it might not make sense to close the position because closing the position incurs costs. So you're putting a lot of trust in them as kind of a hedge fund manager type position, that they know what they're doing and they've back tested, and that they know when to close positions and when to leave them open. So there is definitely that component to it as well. Like, what are their skills as a trader?
Yeah, this is so they have a decision to make here, Matt, right? With like there's someone at Ethena who basically says, look, the max that we can offer is the ETH staking yield, let's call it 4%, plus the funding rate, let's call it going to make 23%. So we can offer a max of 27, and then there's basically a delta that they could move into the insurance fund. So they could basically say, we're going to move 12% of that into the insurance fund, start building up the insurance fund, because they think that offering 15% to the market is still good enough to pull user assets. Yeah.
Exactly.
Okay. And the main risks here are funding rates moving against them, but like you said, it's really like custodial and exchange risk. It's basically a big sex blows up.
Yeah, and then would add in one other risk in poor execution.
And what do you think of like as liquid restaking tokens start to kind of take off? Like Ethena wants to juice yield a little more. Like they start to play with liquid restaking tokens as collateral. That means they can like juice the yield. Maybe an LR, like maybe a liquid restaking token gets slashed. Like what's the risk there? Is that a risk in your mind?
Yeah, I think adding restaking tokens into the mix definitely increases the risk of the protocol, and likely given that it's extremely or seemingly extremely profitable to be deploying these delta neutral trades or these market neutral trades today, I don't see a reason that they would want to go that route besides maybe catching the eigenlayer AVS narrative.
Yeah.
So yeah, I don't think it
The
really
only
makes
reason
sense.
they would go that way is if they just start to get greedy. Like that's just a greedy
Yeah, but it
trade
would be a
basically.
total detraction from the strategy. Like, who is
Yeah.
controlling the risk framework and parameters? Is as a token holder, like, do you have a say in governance and kind of that process, or you're just trusting the team to be sophisticated and savvy enough to implement the strategy?
Yeah, today you're basically putting money into a hedge fund. It's kind of a
It's a
one way of
tokenized
look.
hedge fund.
Yeah, it's a
That's what it is.
tokenized hedge fund.
It's not as stable.
It's a yield vault wrapped in a stable coin and points narrative. It's like kind of Yearn Finance 2.0.
Yep.
Hmm.
How
I
big
feel
do
like the
you
worst
think?
part about
Like,
Athena was just the marketing as a stable coin.
yeah, it should never have been marketed as a stable
But
coin, I think.
everything else, like this all makes a lot of sense to me.
Yeah, I
Yeah.
think it's a really, really cool experiment. I'm glad that someone's doing it, and there is definitely inefficiencies in the funding rate market.
Can we talk about like others have tried to do this before? Right?
Yeah,
Lemma, and there's another project, I believe.
Who was
one
it, Santi?
comes.
Who'd you mention?
Xiao actually had a good tweet about this. I think it's Lemma and someone else. They have been attempts to do this in a tokenized manner. Like certain projects have done it, and I'm not as familiar, but um, I was wondering, Matt, if you had more insight into that.
Yeah,
And what?
one actually comes to mind. It was a project on Solana that ceased to exist. I don't know what went wrong, but it was called Friction. So they had a token vault that
Oh, that was
I
the
wanted.
investor actually in them.
I was an investor
Yeah,
too. Yeah.
it was really cool, really
Yeah.
cool. But deep in a bear market, without the points narrative, without the stablecoin narrative, it didn't work. I forget the exact strategy, but it was something like longing Sol, staking it, so getting some 8% or something like that per year from that position, and then shorting it on, I want to say, Mango Finance or one of the other perp stacks over on Solana. And so very similar, but it didn't have that idea of you didn't receive a stablecoin in return, and there were no points at the time. So it didn't really see a whole lot of didn't see a whole lot of interest from the market, at least not even in its slightly comparable to Athena manner.
Can we talk about so the added element here is that you receive out this stable instrument, and then you has some utility that you can then go use in other parts of the ecosystem in DeFi, like the composability element of that, right? It's a big added feature. Is what you're saying?
Yeah, so there isn't really a whole lot you can do with it yet, but you would imagine that as USD, it's a brand new product. As it gets more integrations and you're able to
Yeah.
do it more with it, there is that added element that actually does have some value.
Right. Yeah, because maybe you can use it for other things, right? You can go then and deposit, get back this what is it, stablecoin ish product, and then go use that to long and basically rinse repeat, right? Over
Yeah,
and over and over.
it sounds like what very well could end up happening.
Yeah. That would add a bit more. Yeah, I guess on the user side would add more. Does it? I mean, how is that any different? I'm trying to think of like if you're a user and you do this in a scenario where you can like take it out and then like rinse repeat over and over to juice more yield. In the same way people are doing that with compound, right? And just farming it, right? You're depositing USDC, borrowing DAI, like doing that loop over and over again, right? Um,
Yeah,
to
see the
just
same
farm
thing.
comp.
See the same thing with Steth, very predominant trade. I guess in
Yeah.
this scenario, the way it would look would be you deposit as a market maker, you deposit Steth into Athena, you get USDC, you borrow Steth against it, and you'd continue looping it to try
Mhm.
to juice your yield. I don't actually. I think today, like a lot of the interest in Athena is likely these shards, which is their version of points. So people, attempting to get an airdrop of some sort, whether it be an Athena governance token or USDC or some combination of the two. And we're just at that point in the market where that's something that it seems everyone is interested in and wanting.
Hmm.
Are you doing it?
I'm actually not in Athena right now, but I probably should be. I've just been extremely busy, so haven't had time, but I will definitely would be. Yeah.
Okay. And this is not so this is, now that I understand it better, this is nothing to do with Luna. Like Luna blew up because this reflexive design. Luna got minted, sold to zero to protect the UST peg. Um, and the anchor yield was subsidized at 20%, was never really sustainable. It's a totally different thing. I saw a lot of comparisons on Twitter, but they're completely different things now that I understand it better.
Yeah, there's no comparing them.
Yeah. Then there's this other interesting thing, Matt, that we were talking about in the Telegram chat with the Ethena guys and with Guy about their go-to-market strategy and like the Ethena. The way I understand it is Ethena is going to be providing L2s with the ability to essentially offer yield into L2s, which the reason I bring this up is Santi and I have been talking about this a lot the last couple of months. I know Santi was an investor in Blast, and one of my predictions of the year was like every L2 is going to eventually offer yield, like native yield inside of the L2, and it looks like I think their head of growth posted something that they're now offering yield to. I think it's Movement Labs. I'll pull this up. Mode Network, which is built on OP Stack, Parallel Phi, which I don't know, but they're an omnichain L2, and Movement Labs, who Santi and I are both investors in. And they said here are the L2s that have announced integration of Ethena Labs as native yield. There's 5 more coming that should drive another $500 million in TVL at least. L2s are the new yield consumers. So Santi, what do you think of this?
About what specifically?
Just about basically all of these L2s are now going to use Ethena as to offer the yield.
I mean, it's market will do its thing. I'm less so as you were saying this, I was reading Tom Schmidt from Dragonfly, and I believe they're investors in Ethena, along with Arthur's family office, Maelstrom, I think.
Yeah.
He has a really good tweet about just criticism and then response, and I would love to just link that to the episode. One of the things that I want to go back to on this, like we're talking about funding rates. And the risk is, quote, quote, USDe is screwed when funding rate goes negative. And he says, which is, I want to call this out because I think it's important. Funding has only been net negative 10.8% over the past 3 years, and only for very small periods of time. So effective to a few basis points per day, which is an interesting stat, actually. And so he says this is mitigated by the insurance fund, which also accrues buffer during periods of positive funding. And the way you can further mitigate this is potential risk tranching via the governance token or staking in the future. This problem is also self-correcting as shorts close out versus self-reinforcing. So I think the interesting thing here is like funding rates, like Ethena is not the only player in these markets. And so, yeah, exactly. This is what I'm talking about. And like there are a fair amount of people that are going to try to arb this out and correct itself, right? So I think that's the most important element here of how this mechanism works, because they're not the only player. They'll be a very big one in funding markets. Yeah, if things get out of whack with one particular exchange, whether it's centralized or decentralized, these things tend to even out because there's a huge arb. Say one exchange, like the funding rate shoots up, then that like naturally gets arbed out, and like it sort of like settles. So this is a great thread. I mean, I won't go into all of it, but we should link it because it's important for people to just read it and digest it.
Yeah, we can read a couple of these. I mean, Tom said it's, people are upset. Basically the way Tom lays this out is like, people are upset about this, and then his counter. So the first one's, it's not a stable coin. He goes, yeah, it's not marketed as one. You can't guarantee 27%. It's a Ponzi. Tom says it's not guaranteed. 27% is just the current market rate. USDe is when ETH tanks. It's delta neutral.
Language. Okay.
Maybe Joseph can like bleep that out.
Yeah, we're very liberal with language. We're not woke podcast.
I actually think Spotify dings us if we swear too much. So.
Does it really?
Yeah. So anyways, we'll link it.
No one's listening.
A lot of swear words in this thread, Tom. So
yeah, Tom, keep it.
I'm actually speaking at Penn. If anyone's going to be there, I'm speaking at Penn Blockchain Conference or UPenn something or another tomorrow with Tom on a panel. So
I've been to that conference. It's actually pretty nice.
Yeah. So, Matt, what are we missing here? Anything else on Ethena we should talk about?
No, I think that people who are buying into it just need to realize like what they're what's collateralizing their position, what the risks are. But it's a really cool experiment, and I'm excited to see it grow.
Nice.
Like we've been skewing negative, just being critical of it. What's the added benefit? What's the positive scenario here? It works beautifully. It scales a lot. People are earning some nice, juicy yield on it. Other than financial engineering and capturing some nice yield, like what else? I guess like a nice experiment in terms of capturing yield for people.
Yeah, I think it's cool. Most people don't have the ability to go and automate a delta neutral trading strategy. So giving, open access to this type of investment or this type of strategy is really pretty cool.
Yeah. Agreed.
All right.
Well, shout out to them. Look, I met them last year. I spoke with the team a number of times, and I didn't end up investing, but nonetheless, I do appreciate the novelty of the mechanism, and I hope it works, and I hope it doesn't fail
Do you
for the
regret
good
not
of the
investing,
space.
Santi?
I did not invest. No,
Do you regret not investing?
no, no.
Cool. Matt, will there be a token?
I mean,
Everyone's speculating,
it's-
yes. Like, at the end of the day, Ansem was in their round. A lot of people in the round I don't think would be investing if there wasn't a token. But I've also heard rumors the airdrop is going to be USDC. I have no idea. Nothing that's actually believable. But
Oh my
yeah, who
god.
knows?
The the new meta was last cycles was Kobe in your round, now it was Ansem in your round. All right, let's talk Gauntlet leaving Aave. Matt, for those who don't know, Matt leads a lot of our governance work. A post by John Morrow, one of the co-founders of Gauntlet. Gauntlet is leaving Aave. It's always been Gauntlet's mission to make DeFi safer and more efficient for users, et cetera, et cetera. I won't read all of this, but the TLDR is that Gauntlet has served as the kind of risk manager for Aave for the last 4 years. And now Gauntlet has announced that they are they said, quote, no longer able to continue our work with Aave. We will be terminating our payment stream as soon as possible and working with other contributors to find a replacement for the risk steward. Yeah, there's some reasons that they laid out, but then they said thanks. And yeah, I'd love to hear, Matt, your take on again, the analogy I brought up at the beginning was it's a bit odd for this to happen. It's like someone hiring, it's like JP Morgan hires Deloitte and then, or like BCG or something, and then BCG fires JP Morgan, right? Usually you have the client fires the service provider. In this case, you have the service provider firing the client. It's kind of a bizarre thing. Matt, I'd love to hear both what's the drama and the speculation around this, and then what is maybe your more sober thoughts around this?
Sure. So Gauntlet was one of the first companies, maybe the first company that ever really went and operated in DAOs that tried to become a DAO service provider. I think their compound proposal might have actually been the first of its kind. So as far as a company who has experience operating in DAOs, Gauntlet's kind of the best example that I can think of. They operated in more than a few DAOs, and they've been doing it for a very long time. When you're selling into a DAO, it's a tough customer. It's hundreds of people with diverse backgrounds, with different intentions for what the future of the protocol looks like, and it's impossible to please everyone. My speculation would be that a loud voice, like maybe even a single loud voice in the DAO, was able to make their life as far as operating within Aave so difficult that it just wasn't worth the headache to them. This is speculation, but for reference, like that one of the biggest delegates, ACI, Aave Chan Initiative, voted. It was one of the few votes against their proposal, their last proposal to continue their work with Aave. There's a lot of, so of course, like Aave had this big event with CRV Curves token where they basically took on way too much risk. We're willing to take on too many CRV deposits. So it seems that a lot of people might even blame Gauntlet for that, given that they're the risk manager. But looking at it from an unbiased perspective, Gauntlet actually went and created proposals multiple times to decrease and to wind down the amount of CRV that Aave was willing to accept, and it was turned down by the DAO. So it's hard to fault them for that situation from a unbiased perspective, but I guess there probably was still some negative sentiment about it within some of these larger stakeholders in the DAO. End of the day, operating in DAOs is it's it people in crypto, like we say, we love pain, like we love to cause ourselves pain, and those of us that like to go and be active in DAOs are kind of a prime example of that, I think.
Are you familiar with Chaos Labs?
Yeah, of course.
They also, and look, full disclosure, I'm an investor there. But they also became involved over a year ago, I think, and are also create a dashboard. And they also do risk management in a more automated manner, sort of like simulations. Gauntlet, I would describe more as like a consulting firm, like very, very math heavy, of course, like gigabrain guys, but they're more like um, bespoke in the way they work. Right, they go in, they make proposals. It's very human centric, whereas Chaos tries to sell more out of the box kind of solutions where it's like constant simulation and ongoing monitoring. But is there something to read here in terms of Aave is going to continue to use chaos? The Gauntlet just sort of decide that it was, it's just probably better for them to go out and pursue other things and spend more of their resources in other projects for given the chaos is like, working with Aave closely.
It's an interesting perspective. I would guess that, from some participants in the DAO's perspective, that is the case. We think Chaos has been doing better work, so let's only work with Chaos. But I do know a lot of the Aave delegates believe that having two risk firms was better than having one. So I think at the end of I do actually think that this was Gauntlet's decision to leave rather than, Aave firing them. As seen, I think they passed a proposal in maybe
Mhm.
December or end of last year where they were actually, furthering their engagement with Aave. So yeah, like to some extent, did chaos come in and kind of eat their lunch? Like maybe that is the case, but also I think that probably one loud voice in the DAO, potentially the one you have pulled up right now, kind of just made their operations in Aave such a headache that it wasn't,
So,
worth
Matt,
their time.
I mean, I'm like, we're avoiding the elephant in the room here, but like, why is everyone on Twitter being like, Mark Zeller, Mark Zeller? Like, what's the,
So I saw before we go there, sorry to, I saw a great meme which is like Gauntlet's bill to Aave. Consulting research,
I saw
100K. Add a budget expenses, 10K. Uh, Dealing with Mark Zeller, 10 million. So,
this.
Yeah,
yeah.
so like
Yeah.
Mark Zeller runs an initiative called Aave Chan Initiative. They're one of the biggest Aave delegates. I think they have close to 50% of like the average vote on most proposals in that DAO. So a ton of power. Um, at the end of the day, it is a decentralized protocol. It's not like whatever Aave Chan wants happens, but when there's a single actor with so much power in a DAO, it definitely becomes important that you're able to work with them efficiently and effectively. So if there's any animosity there, it's probably going to be a non-starter for your future success and ability to have a happy working life while working with your partner that is this protocol.
What do you
If
think?
you were, it's not like you as an observer and seeing all of this unfold, like would you have done anything differently if you were in either Gauntlet or Ave's position? Second, what are your kind of main takeaways for governance in general, management of DAOs, and submitting proposals?
I think from the Gauntlet and Aave perspective, like if I'm there probably wouldn't be anything that I did differently. Um, it's difficult. If I was Gauntlet, maybe I would have tried to pursue through it. And like, if I decide Aave is this important part of DeFi infrastructure that is critical to the future success of our space, maybe I'll try to push through it and continue to like assert myself and let it blow over in the long term. But other than that, like I do think Gauntlet has been doing a pretty good job as far as being a risk manager there. Being Aave, it seems that some of the actors that wanted Gauntlet gone got what they wanted. So it's hard to speak on behalf of everyone. Others, for instance, I know are sad they're leaving. And then as far as governance in general, it's tough. Like governance is broken, but it starts with the token holder. So like the reason governance is broken isn't because of delegates, it's because of the token holder. They go and delegate. First of all, only like small portions of the actual circulating supply go in and delegate their tokens. For Aave, I think it's one of the highest at like 8%. Don't quote me on that, but under 10%. And then once they delegate, they just forget about it. So it's not like they're holding their delegates accountable. So if they disagree with the decision that's being made, they go and talk to them. Like that doesn't actually happen in crypto at all. So the problem kind of starts at the token holder level, like between, delegating and forgetting, and then also between vote and voter apathy. So people who just hold tokens and then don't vote at all. Then like you go a level further and there's problems at the delegate level of misaligned incentives as far as, like Aave Chan gets paid, I don't know, $1 million a year or something like that for this position. I'm not actually negatively commenting on that at all, but there's incentives to ingrain yourself in these DAOs in a way where you continue to have your own incentive rather than just act in the best interest of the protocol. So like, how do you make that a more fair and efficient process? Like, how do you have delegates get paid at the end of the day? It's almost a full-time job, so they should be getting paid. So yeah, across the board. And then you also have this third issue of sophisticated actors and entities don't really care about governance or want to participate in governance. So you look at other aspects of crypto like MEV, ZK, and you have some of the smartest people in the world who are dedicating all of their time to studying these issues. And then you look at this predominant issue we have that no one cares about or wants to pay attention to. So I guess I would say those are like the three layers that I think about most when I'm thinking about the problems of DAO governance.
Maybe we should create points for governance and delegates and reward like okay, certain teams have been like airdropping if you've voted, if you've submitted a proposal in these DAOs. Like I think it's one of the more underappreciated uh, like inputs or things that people are doing in crypto. Like there are some very like Monet Supply comes to mind. Like he was just instrumental in maker governance, and he didn't have as much MKR. He was but he was super engaged, super active, like on top of it, and just didn't get enough recognition. I think someone like that should probably be more empowered. Unfortunately, DAOs are economic DAOs, right? It's based on token weight. And so, for the most part, and it's hard, right? When you want to pass these proposals, I constantly get pinged that, hey, we need to pass so and so for these DeFi protocols. Do you have tokens, or can you help us? Like, no one's really voting, and a lot of VCs are not even voting, and maybe they're not delegating, and so it's just difficult. It's difficult to do governance, not just in crypto, and crypto's just kind of figuring that out.
Matt, what is it like? What does this make you think about like Blockworks' efforts in governance? And if you overshare, we can take this out or something. But like, would love to hear your candid thoughts about like the impact that this has on like your strategy with David and for Blockworks like governance side of things.
Yeah, I don't think there's any like fooling ourselves. Operating in governance in DAOs is hard. It's a headache. It can be extremely difficult customer to work with. Things can change, drastically. The things that are expected. One thing is like, you create a proposal. There's KPIs involved, and all of a sudden you want to be working on something different, but you pass the proposal. There's a lot of difficulties of operating in a DAO, but at the end of the day, I think that for crypto to succeed, we need governance to work. If you're invested in crypto, if you're a protocol founder, you need governance to work while your tokens vest. Like otherwise, you're shit out of luck when it comes to your tokens vesting, and all of a sudden, this decentralized community has absolutely wrecked your token price and protocol. So despite it being hard, despite it being, frankly, sometimes even painful, I think it's necessary that Blockworks operate in DAOs if we want our space to succeed. I think it's necessary that other sophisticated actors, service providers, entities have the same outlook, because at the end of the day, that is how we're going to make governance operate more efficiently and effectively, and create protocols that are able to truly be decentralized and operate, with some merit over long periods.
Yeah. It's funny the lobbying that happens behind the scenes. I got a call yesterday from someone who's applying for the Arbitrum. We're applying for the Arbitrum research thing. They're applying for the Arbitrum security thing. And yeah, there's a surprising amount of lobbying I think that happens behind the scenes that people don't see right now. Basically lobbying for votes. Cool. Anything else on this, Matt?
Yeah, I'd just say, on the lobbying front, it looks like traditional politics, someone hiring their cousin or their nephew or whatever it's for their position, like lobbying behind closed doors, all that. It's not a new problem. It looks very similar to the government of different municipalities, and hopefully we can do a better job in the future.
Do you think there's a lobbying firm that could get created in crypto, Matt, that would be successful?
100%. Not even a question.
Yeah, I think I've been thinking about that too. I think if there's a founder interested in governance and lobbying and knows how that game works, or even if you don't know how that game works, like I think you're ambitious founder, like you want to get into crypto, I think that's a good company to go start.
Yeah, you could even go a level further. Like there aren't a whole lot of companies who are DAO service providers who are trying to operate in this industry. Like no matter what you're starting, if you are, targeting DAOs as your customer, you might have to face some pain, but it is a largely underserved area of crypto.
Hey everyone, wanted to give a big shout out to today's sponsor, Wormhole Foundation, stewards of the Wormhole protocol. If you are like Santi and I and you play around on chain, you know how bad the cross-chain experience is today. Well, Wormhole has set out to solve that, powering cross-chain transfers for over 200 different multi-chain teams, including some of the best like Uniswap and Circle. So what does that mean for you, the Empire listener? This opens up a huge number of multi-chain use cases across DeFi, NFTs, governance, oracles, and more. By supporting over 30 different blockchains and 6 different runtimes, including Sui, Solana, different ETH L2s, Ethereum, and a whole bunch more, that means you have now the most powerful interoperability platform at your fingertips. If you're a developer, you'll be excited to hear that Wormhole provides an extensive suite of tools and infrastructure so that you can securely build multi-chain applications. But don't just take our word for it. Obviously, Wormhole protocol leads the industry in all-time messages transferred with over 900 million cross-chain messages. 900 million, that is close to a billion, and that's a big number of messages. As a thank you, Wormhole Foundation is dropping exclusive NFTs. That's right. We got some exclusive NFTs for Empire listeners. Hit the link in the description to claim your unique Wormhole NFT today. The days of not using crypto for really anything in the real world are over. It is time to start using crypto in everyday transactions, whether that's shopping online or just buying a bagel on the street. We're excited to tell you about PYUSD, PayPal's entrance into Web3. PayPal is proud to share an open letter to the crypto community that outlines their commitment, their roadmap, and their goals in the digital currency space. PYUSD seeks to transform how you interact with your digital assets. Available today, you can send your crypto to your PayPal account, swap it for PYUSD, and then use it to check out at millions of stores. PayPal invites you, all the Empire listeners, to be a part of this journey. Hit the link in the description of today's episode to read PayPal's open letter to the community. It gives you a really good sense of what their vision is. Take the next step by signing up for a PayPal account today. The future of crypto payments starts with PayPal. Santi, my good man, you tweeted something. You said, assume you're bullish. Here, I'll share the screen for anyone watching on the tube. You said, assume you are bullish ecosystem X. What outperforms? It was L1 token, like ETH or Solana or, AVAX or whatever it is. Sui, whatever you want to say, the underlying token. Then there's NFTs. So if you think ETH does, you're bullish ETH, you then like Pudgies will outperform, or you're bullish Solana, Mad Lads will outperform, or apps, right? If you're bullish Solana, maybe Jupiter outperforms, or if you're bullish ETH, maybe Uniswap outperforms, and then there's C results. So the 33.6% of voters said L1 token, 29% said NFTs, and 22% said apps. And actually, at the time when I voted for this, apps were higher than NFTs, and NFTs were in last place. What are your thoughts? I can't see your vote here. What do you think? What's your vote? And I don't know if there were any comments on this post that made you change how you think about things, but would love to get your take.
Oh, definitely the comments changed my mind.
I hear a grain of sarcasm in
that. I generally think that if you're bullish in the ecosystem, I've historically done a levered bet through a combination of that. I don't think it's like one or the other, but strictly outperforming historically, I think it's been like highly reflexive. Like NFTs have the highest beta. Second to that are apps, and then it's also a difficult exercise because you have to get timing right. The farther out you go on the risk spectrum for NFTs, right, you have to get the timing right. And for apps as well, like DeFi, for instance, if you look at like DeFi Summer, vastly outperformed Ethereum. But if you compare DeFi tokens relative to ETH, they've been on a downward spiral and haven't really recovered.
Right.
And so, it depends on the timing and I guess your conviction and your ability to time these things, and how you're implementing the strategy. Like NFTs, I've borrowed against my base stack. So I had a bunch of ETH, would borrow a decent amount to buy, punks and other collections, and then with an intention to rotate at some point. And like, in retrospect, like that strategy, I wouldn't recommend it to people. Like it has like NFTs are not only liquid instruments, right? But you know, um, also when the price of the like when ETH ran from 25 to 4,000, some of these collections actually don't hold their floor relative to the base asset. So that's also puts you at liquidation risk. Um,
Hmm.
but yeah, like the more obvious one I've privately kind of talked to you about this, like I had this idea of like, I really like the Solana as an ecosystem. I think the NFT ecosystem there is going to have a pretty meaningful like growth. There's a wealth effect because of airdrops. How do you get exposure to that? Well, Mad Lads is the number one collection that has run up quite substantially. It's now 20K. Tensorians is one also, which is double kind of whammy. Not only is it a nice collection, top three I think, but also there's speculation around the airdrop, and it's a good like you know marketplace. So you also have exposure to the NFT like trading
Hmm.
a la Blur. The question is like, does it outperform Sol? Probably, most likely. I mean, Mad Lads has outperformed Sol, right? The floor of Mad Lads on a Sol price, you thinking of it in Sol basis, has gone up quite substantially, right? There we go.
Yeah.
Discount
So
from 100,
November they were
basically
worth
2x,
$2,000. Now they're worth $20,000. So they've gone up 10x since
10x,
November.
right?
Since
Yeah.
November.
So yeah, look, I mean, I think just to round it out, it's also I've had a lot of conversations. I actually would love to get your opinions on this, both of yours. Like, will infrastructure continue to outperform, or will applications like actually like outperform this time as we get more usage? Depends on the
Yeah.
chain, depends also on the project, right? But you know, um,
Yeah.
it's a long-winded answer.
No,
How
it's a
I'm
good
doing it,
answer.
how I'm doing it now. It also depends as the portfolio grows. Like I was having this discussion with someone and that I kind of really respect and consult with. And we're also of the mind that like it depends. Like if your portfolio is as it grows, like maybe the proportion of like base token that you want to hold is different, right? Than if at various portfolio sizes, it also kind of factors into how you want to approach this type of
Yeah.
strategy.
Well, there's another element to this too, which is this like idea of these tier one NFT communities getting airdropped tokens in this cycle, which has never existed
That's
before.
very true. Very true. Yeah, great
So
point.
like pudgies. What's a pudgy worth right now? 60K? 60K USD? Like, do you think that you will, yeah, there you go. Oh no, share this tab instead. Here's the price of pudgies. Yeah, so a pudgy is about 60K. It's 19 and a
Funny.
half
It
ETH.
was like 4 ETH in December or something.
Yeah.
3 ETH.
Yeah, yeah. Do you so 60K is crazy to buy for an NFT. Obviously, it's very expensive amount of money for a JPEG. But do you think that you will get airdropped more than 60K worth of value for a pudgy in this entire cycle? Probably, right? There were people at
I had
Blockworks
2 calls with
saying,
teams that are thinking about airdrops, and they're thinking Pudgies came up for sure.
yeah. I mean, there are people at Blockworks who made 50 plus K from the dim pudgies airdrop alone, right? Um, and that basically buys your pudgy right there. So Matt, I'd love to get your take on all this.
Yeah, I mean, I don't know if you're going to get 60K out of your penguin, but you'll definitely get a nice solid portion out of it. Would be my guess. Mad Labs are another good example, like you mentioned, they 10x, but you got a couple grand in Pith, you got like 5 grand in Dim. You're about to get the Wormhole airdrop, which a lot of people are speculating is going to be one of the bigger airdrops ever. So definitely we're seeing this narrative of like you hold these blue chip NFTs and you get airdrops, especially if you're interacting with the protocol, whether it be like, getting some badge on Discord or something of that nature. Um, so yeah, like at the end of the day, I don't think you can disagree. Like your point, Santi, that NFTs are the highest beta and then apps and then the ecosystem token. Like I think it's very hard to disagree with that. I think that's pretty much factual. And then, you add on that layer of if you have call it 8 figs or more, like you're probably not able to allocate as well to NFTs and maybe not even to apps. And then as you go down that scale and have lower amounts of money, you can play around a little bit more in some of these more liquid, lower volume pairs and NFTs. So yeah, I think it depends on the person.
So
My
Matt,
my
let's
my
say you
my
had a
lizard brain is like, I don't think of NFTs as investments. This is sort of my philosophy.
oh wow, that's an interesting take.
Like I know they are,
Here's
but I am a
yeah,
collector. When I collect things, I've never sold an NFT. I've only sold one,
yeah.
actually. Well, two. Bored apes that I got gifted, because I never meant it. I got gifted bored apes and I sold them. And the second one was also an NFT that I got gifted. And the team that gifted it to me, it was an Nifty Island thing. Someone from the community wanted to buy this island, and I was like, "I'm." It feels weird to sell something that I got as a gift, but they were okay. They were like, "You should sell it to this guy." I was like, "All right," but I don't. You just become. There's too much emotional cachet to these things. Like when I collect things, I'm like, I don't want to.
Yeah, yeah. Oh, I think there's two different strategies here. Like, let's say I don't know, I don't think you ended up doing that levered bet on Sol, Santi, where you're going to lever up and buy some Solana NFT, but like that's an investment. That right? You're not.
Sure. In that case, like Tensorians, yeah, like punks too. Like
That's a
I
levered
want,
bet.
I wanted to collect these things, but I haven't sold them.
Yeah, I think there's two different ways. Like, there's three purchases you can make of an NFT in my mind. There's sweeping the floor. That's a that's an investment. There's buying a grail.
But by the
Like,
way, imagine anyone like just jumps into this pod, jumps in minute whatever, and listens to this thing. Like you're sweeping a floor. Like, wait a
but I
minute, I
think
thought there was
but
an
yeah,
like
but
you're
it's
talking
no
about
different than like
janitorial services. What
yeah,
the
I mean
hell
it's
is this?
similar to it's similar Blockworks
Anyways,
just added we got a new board member. And he was the CEO of Sotheby's and is now on the board of Blockworks. Great guy named Tad. And I had lunch with him yesterday, and he was telling me, he's like, "Do you know the four assets that outperformed the debasement of the dollar over the last 15, 20
and
years?"
wine and all this
Right?
art.
Yeah, yeah. Yeah. But I don't know. It was actually a very interesting conversation about like in an infinite world, what becomes valuable, and it's finite things. And I
Isn't
think
that
so.
what
Anyways,
digital assets are? Like ERC-20?
no, but like I think that it's no different than buying watches, right? Like if you go buy a, let's say a Patek, for example, or you go buy something, like
Yeah.
you should probably either get the new like the almost the cheapest Patek so that you can get into the market. You should buy a Grail Patek that's really nice if you think that like for let's say you're doing it for investing. If you're just getting a Patek for the investing purposes, you should either get a Grail Patek or you should sweep the floor of Pateks. But if you're getting a Patek for yourself, like you should buy the Patek that you
Oh, the goddamn Patek that you like.
love,
You're gonna buy a
that you
Calatrava
love
because
the most and
whatever.
that you will never sell. And I think it's the same for NFTs. So like let's say you're going to go buy a Pudgy today. You either sweep the floor. Let's say you're buying a Pudgy for an investment. You either sweep the floor or you buy a Grail. Nothing in between. But if you're buying a Pudgy to have as your Pudgy for the next 20 years, get the Pudgy that you love the most.
Hopefully, it's a budget that is also a grail and you can also afford, and it doesn't encompass a big part of your portfolio,
Yeah.
so
So
that you never have to sell. See, I think there's a lot of the best advice is I think real estate investors are like really good in the sense of like the best. You'll hear them say you'll never lose money in real estate if you don't have to sell, um, and you can just be incredibly patient
yeah.
and you can afford to also buy when others are in a tight spot. And I think it's generally true. Like the problem with these NFTs is like just people should be, and I'm saying this like it's just common sense, but they can be highly liquid. And you can look at while we are talking about good collections in this current market, zoom out and look at the prior 9 months of certain collections, and it doesn't look too pretty for Azuki's. It's actually like someone had a really good tweet about this week that I saw. It's like I think it was actually Mike,
It
your
was Mike.
co-founder.
Yeah.
It was Pudgies and some of the Solana collections have really performed exceptionally well. Everything else, Azuki's, Bored Apes, and some of the other. Uh, here we go was they've haven't had a similar fate.
But not to be like Monday morning quarterback, but doesn't it kind of feel like an obvious thing in this sense? Like when you were if you take 6 months ago, like the people that you really respect in crypto, the people who are like deeply crypto native that you think are intelligent, like no one's talking about Azukis, right? Nobody's
What
talking about bored apes, you know? It was Mad
Arthur from
Lads,
Defiance might
historians.
I'm like, disagree. Yeah. Look, some people had Azukis. I think they're really they actually kind of screwed it up with the second collection that they
Yeah.
launched was like a total botch. I think it was one of those things that they could have controlled. They just, but Bored Apes, for instance, yeah, you're right. I mean, I think Bored Apes is just different
It's
category.
just a
And
respect. I think like what's ripping in NFTs right now? The collections that deeply crypto native people respect. It's the same reason why bad kids are ripping, right? And
yeah,
it's
Bad
like
Kids are like the, I would say Bad Kids is to Cosmos what Matlets is to Solana to what
right,
CryptoPunks are to Ethereum.
right. Matt,
You could
go
go
ahead.
a step further with the Pudgies too. Like their brand outside of crypto has become really well respected. Like my girlfriend randomly gets their Instagram reels that have 10 million views on them. They're selling
Mhm.
Pudgies in Walmarts. Like they've achieved this different level of brand that I'm not sure
Totally.
really any other company in crypto has succeeded in, like maybe
Yeah.
Coinbase.
Yeah,
Like
look at their Instagram
Yuga
followers.
Labs raised all this money, didn't do. By the way, there's also something to talk about here. Yuga Labs is interesting developments in terms of kind of what they've
Yeah,
done recently. But like Pudgies did what Yuga tried to do with a fraction of the budget, which is incredibly impressive, right?
yeah. Look at this. They have 1.3 million followers on Instagram. This one's crazy. They have almost 15 billion Giphy views or GIF, however you pronounce it. Um, That's cool. Matt, if you had I'm gonna make up a number here. If you had 100K and you were super bullish, um, I'm trying not to pick on anyone. Let's say you're super bullish Ethereum. You're like you gig along Ethereum, whatever. Are you buying ETH spot? Are you levering up and buying ETH, or um, are you buying like some ETH collection? We'll use Pudgies here because it's been ripping.
I'm probably long roll-ups. So like nothing on Ethereum or Ethereum. I'm probably long like OP, ARB, probably mostly OP and just sitting on it for like depending on the time frame, but for a 6-month time frame, call it 12-month time frame. Like I think that that's how I would get my beta exposure to Ethereum through L2s, specifically maybe OP.
Mm.
But I think Pudgies are a good bet. You know, if you're talking about 100K and you're spending 60 of it on an NFT, it's a very large portion to be in one item, especially. But like I don't think you can go wrong there. But yeah, like at the end of the day, if I'm bullish in the ecosystem, like I'm going for beta. Like I'm probably not
Yeah.
longing the ecosystem token. I'm sure I'll have a good amount of it, but on a shorter time frame, like something that I'm not holding for the rest of my life, something that I'm planning on, selling in 6 months, 12 months, whatever. Like I'm definitely, looking for more beta, whether it be through NFTs or through roll ups / apps, doesn't matter. But yeah, for Ethereum specifically, definitely roll ups.
The long L2 is one I've heard from multiple people, and in terms of the ratio of like if you believe in Ethereum, well, like um, something like Arbitrum, like the ratio of how an L2 should trade relative to an L1 probably grows is an opinion that I've heard from some folks, and I generally agree with that. And I'm biased, of course, because that's how I actually express my exposure to Ethereum. Like I certainly have ETH, but by virtue of investments in L2s and other like middleware infrastructure of is how I generally think it's like not too far out on the risk spectrum. Like you certainly have to be opinionated on a particular L2. You could have a basket of them, but as a whole, I think like if Ethereum does well, L2s do better. I think as a basket, they just have to because in or like with Eigen in the mix, like I feel like Eigen uh, is like the saving grace for Ethereum in many ways, like especially this cycle with like liquid restaking and ABS and all that stuff. Like it doesn't if Eigen doesn't work, then I'm more bearish on ETH. So if you're and so by virtue of that, I think you want to have exposure to the thing that's pulling ETH this cycle, which I think is I mean, you can talk about an ETF, but it's Eigen plays a big and L2s play rollups play a huge part in that. So I'm just thinking of the catalyst that would drive the L2. In the same way that like DeFi was a big drive of Ethereum and interest in Ethereum as like the first killer use case back then. But it feels like DeFi you kind of had to was a little bit less sustainable in terms of the whole yield farming um, kind of wave, whereas the L2s are like far more sustainable. I think because they'll see the more usage, they'll and I think that's probably a better like I would feel more comfortable this cycle holding some like an L2 token for longer and maybe not even rotate back to ETH. I mean, I think you always, I mean, I think if it's a growing the ETH stack at some point, like you want to think in ETH terms, but I would feel more comfortable holding longer term an L2 token or something like Eigen versus random like DeFi project.
What's the over under on Eigen FDV at launch?
30.
I said
Yeah,
30
agreed.
today. Yeah.
Three handle, baby.
Yeah. I said 30
I
in the
think
chat
so.
today.
How long it stays there? Probably longer than Starkware.
Did you invest in Eigen, Santi?
I passed in the 1 billion round.
I passed at
And that
1B.
is
Let's go.
that was last year.
Yeah, yeah.
Right.
With
January of
Calvin?
last. Just when we had them on the pod, yeah.
Yeah, exactly. Crazy.
We can't catch them all.
Can't catch them all. Matt, do you or actually both of you guys, when you are long something, like let's say, okay, so Matt, you think that this L2 trade is going to work out. Will you just go kind of spread across like your 2 or 3 favorite L2s, or uh will you pick one? Like, or let's say it's next gen blockchains, like, or whatever you want to call this bucket of like Sui and Move. Like, are you just like, I don't know, I've got $1,000, I'll put 500 in Sui, 500 in Aptus, or are you picking one? Or yeah.
Yeah, I'm picking one. I mean, I spend 24/7 in crypto. I'm supposed to have opinions on what's better tech, what's more in the narrative. So, like, diversification amongst the basket isn't really something I'm interested in. I think that I have the ability to like pick, and I'm wrong a lot, but like I have the ability to, with a thesis, go in and say I think that this one's the one that's going to outperform.
Yeah.
And then sometimes I'm wrong, but at the end of the day, as long as I went in with a thesis, and if the thesis is proved incorrect, and I close out that position when that happens, it's still a win in my book.
Blockworksresearch.com. There's your plug. Go get a sub, folks. Prices go up March 18th. Yeah, Yuga Labs, interesting stuff this week. So they both acquired Moonbirds. Is that the name? Proof? Moonbirds? Santi, you're muted. So Moonbirds, and then they let their CEO Daniel go and one of their co-founders step back in. Any thoughts on this? Santi, any thoughts?
Yeah, it's Kevin Rose thing. I don't know what Yuga's end game is at this point. Like, and
Get
like,
the balance sheet of Moon and launch a token for it.
I think there's a lesson in there of like raising too much money. In theory, sounds nice. In practice, I think makes you do dumb shit.
I think they have one more shot.
Yeah.
Other side, if it actually is a really cool game world ecosystem, then Yuga actually still has a chance at coming back in the narrative. But I think that's kind of their final shot.
Look, I hope it works. There's just too many people that would probably be affected if it doesn't, and you never want to see a. You remember like the company I'm thinking of in Web 2 is Magic Leap. You remember them?
Yeah,
They're
of
like
course. Yeah, the virtual
they're
whatever.
kind of still around, but
Are they?
they're
I
all
didn't
a
realize
hype.
that.
There was a ton of money. They consistently raised a bunch of money, but they haven't delivered. And then, just a lot of money that got burned.
Yeah.
But like Pudgy's, I saw, just bringing back the Pudgy's. I mean, I don't know how far they are, but the video that they shared, it was like in December, right? Of like the world that they wanted,
Yeah.
the game. I mean,
They're doing this with like they only raised like $1 million.
that's
So
what I'm saying.
yeah.
Like, I'm struggling to understand how you guys like. You can't. I guess I've heard it from many founders. It's just constant. Like, there's a popular phrase among like builders, which is you throwing 10 more engineers at a problem is not necessarily going to solve the problem. And sometimes, like, yes, you need more resources to hire more people, but I've seen time and time again many teams like get bloated. Hire BD, marketing, do all these things. I'm like, whereas I heard it from Seb from Zapper. He's like, our best engineer has 10x the amount of output than like
Mhm.
some of the other engineers. So go find that 10x engineer. And I don't know, maybe Pudgy's has just been lucky, but those guys just seem to ship. But hey, I don't have a full insight into what's going on in Yuga. Maybe they'll, blow our minds, with what they're doing, and they just haven't released it. So I want to be cautious and caveat everything that I'm saying. Just that I don't have like insight, but it sounds like there's more going on with Pudgies for a fraction of what Yuga and the resources that they have. So maybe there's something in that.
Yeah. Yeah. I mean, Blockworks bootstrap for the first 5 years, right?
Yeah.
It makes you more money, more problems, right? And it like when startups raise too much money, I think they basically lose their core focus and like never really understand who their user is and how their product is differentiated in the market. They
Well,
can throw money at
this
a
is a good
problem.
transition because we want to talk about airdrops, and I want to ask you a question, or both of you guys. Do you think that most teams in crypto understand who their customer is?
You told me that was a bad question when I asked Keone that yesterday.
Okay, now wait a minute. So you're sharing private? It's not kosher, man.
All right, not Kosh.
In that context, it was like
I'm just ragging on
we could
myself.
have talked about.
I asked a
We could have,
question yesterday to Keone, and
you
Santi goes, "Bad question."
you said who's your customer, devs or users? For an L1, I think it was like a mad kind of question. I'm more thinking of like dApps.
An L1, your customer is a dev. An app, your customer is a user. That's my like. Take crypto out of it. Think of like AWS. Like, who's the customer of AWS? Squarespace. Who's the customer of Squarespace? A user.
Yeah, no, I
You know.
like I understand. Let's go back to the question that I asked initially. Do you think the projects really understand their customer? And does an airdrop introduce noise? Because a lot of this is just incentivized.
Like it depends what you're trying to optimize for though. An airdrop is a marketing expense, right, for a company. But it's a marketing expense to serve what purpose, right? So I think a lot of people think about a marketing expense as a way to just pull users in, just like as a way to pull people into your product. But so far, historically in crypto, the best way to pull someone into your product and to get someone into your ecosystem is number go up technology, right? It has nothing to do with usually in like Web 2 land, you're marketing your technology and then that pulls people into your product. In crypto land, it's number go up technology, then pulls people in. So, like the customer of an airdrop could be the traders, which causes number go up, which then causes developers to build. Does that make sense?
I feel like it's not just a marketing expense. It's also got this component of an attempt at regulatory arbitrage as far as like truly decentralizing ownership of your protocol. Um, when I think of customer in crypto, it's a little weird because I think the only way that a crypto protocol really gets a brand moat and stay power is through like proprietary order flow. So transactions that are being routed to this protocol through, a user interface or something of that nature. And I don't think airdrops really help you get, proprietary order flow or exclusive order flow. So at the end of the day, I don't think that, those two things are super connected. And no, I definitely don't think most protocols know who's using their application. But I think it'd be very difficult to get a good sense. Like we have a sense of what kind of users on crypto Twitter, but we don't have a sense of who's doing all of the stablecoin transfers on Tron, and we don't have a sense of, or at least I don't, of a lot of different aspects of who crypto users really are.
Yeah. Sort of a necessary thing. I think airdrops are going to continue to happen. I think teams, it's sort of a table stakes, but perhaps what would be wise is to not give out the entire airdrop allocation at once and reserve a lot of it down the road to be opportunistic, strategic, as you get to understand the customer better. Like simple things like Jupiter, right, or Blur. Like you have the certain rounds as you go, right? You want to sustain trading activity and interest. Like you have a constant drip of airdrops to keep up the KPIs that you're optimizing for. Whereas other teams just kind of give out all the airdrop at once, and it's I think it's not probably wise to do that.
I feel like it hasn't worked so well. Like I'm thinking of Vertex as a good example of a protocol who had, different epochs and rounds of giving out their token. And the second it turns off, all of a sudden, volume, or at least a large portion of volume leaves. and they successfully, incentivized a significant group of traders to then have some brand loyalty and use their UI, use their UX, use their protocol. But I'm not even sure that has proven to be a worthwhile endeavor as far as the amount of money that these protocols are giving out versus the number of users that they're onboarding.
Well, that's the other thing. So if you're Vertex, do you just, what's the answer? Not even introduce an airdrop?
I think the airdrop was a good idea. Like it did bring some users. It was just an expensive way of bringing some users.
What do you think, Santi?
I don't know. I mean, it's a difficult, you can't make generalizations, right? I mean, you could look at Uni and it was forced its hand because Sushi tried to vampire attack it, but Uni became Uni at a different time, right? I mean, there was just a lot of these things. Now everyone expects a token and points. And so it's like, all right, well, I think it is difficult. Like you were talking about Athena, like, are people expecting a token? Most likely. There have been projects that have gotten away by just saying, hint, hint, wink, wink, there's a token coming at some point, but 2 years in, they haven't released a token. I don't know, man. I think it's a lot of these discussions are difficult because we have like 100,000 users on chain, less.
Matt,
I
I have
do
a
think like if you believe that like we're going to get to millions of users, like I don't know, just build a good product and have points ish and maybe build loyalty. I don't know. Like something like Vertex, like if you're a perp protocol, if you allow people to like do swaps, have like meaningful utility, then I don't think you need an airdrop. I don't think you should rush it. If you feel like you're being outcompeted by someone that has an airdrop, it's tricky. Ultimately, Sushi didn't deliver on the product as much as Uni has. And so now you can look at both tokens, and that's a very clear reflection. The market's telling you his it's like the market is like a voting machine in the near term, waiting machine in the long term. I tend to think like the really good teams that are excellent product builders should have conviction in the product that they're building, that it is just vastly superior, and they can copy that on the margin. It is open source, whatever. Um, but I wouldn't rush into an airdrop or a token, even in this market. And I appreciate everyone's thinking now because prices are up and it's a good time to launch.
I wonder if what's the Ben Graham quote, Santi, that you just said? Short run, the market's a voting machine.
The market's
Long
a
run,
voting
it's
machine in the
a
near
weighing
term.
machine,
It's a
right?
weighing machine in the long term. So you want to be a really heavy
Crypto
protocol.
does this weird thing. The thought there, I think, is like short term, it's basically just based on like what people like. Long term, it's based on like the value that accrues to something in the cash flow that it spits off. But in crypto almost like extends the time horizon for the voting machine component because of culture and cults, I would say. Like
Bitcoin is the ultimate meme coin.
it's like memes and like adding culture into the market and adding like cults into brands basically extends the time horizon for something to be for the market to be a voting machine as opposed to a weighing machine. I don't know. It's just an interesting idea.
Yeah, markets stopped being very rational, not just in crypto. Long time ago, like really long
Yeah.
time ago.
There was this good chart I saw about like we are moving to a dopamine economy. It made me think of this.
No.
I'll try to find it. I'll find it
No
next
one's
time.
thinking about like what JPow's doing. Everyone's looking at Nvidia earnings. See if the market's going to be sustained. It's so nice.
Yeah.
Interesting
So,
times.
oh, this is it. Here, let me show you that we can wrap on this. Everything has moved. There's slow traditional culture to fast modern culture to dopamine culture. It used to be play a sport, then it moved to watch a sport, then it moved to gamble on a sport. Newspaper went from newspapers to multimedia to clickbait. Went from film and TV to video to TikTok. Went from albums to tracks to TikTok. Went from views on a gallery wall to viewing on a phone to scrolling on a phone. Handwritten letters to voice, email memo to short text. Courtship and marriage to sexual freedom to swipe on an app. And the category that's missing from this is markets. And I think markets have moved from actually, if you look at like markets a long time ago, is dividends, right? Like you didn't really buy a stock for a number go up, you bought it for the dividend. You look at the
I mean,
dividends
you
of
bought
like,
it go up too. Come on, man.
no, I mean, if you look at like
Who would have fucking bought a stock if you didn't want it to go up? Like,
You
div-
became, if you wanted to be a shareholder in Carnegie or like in the Gilded Age, like 1870s, like Carnegie, Rockefeller and stuff, like there wasn't really necessarily a stock market. But
You look at the railroad mania, dude, the tulip mania, like animal spirits have been around for a while, man. It's just
no, of
human
course, every
psychology.
industry starts with like,
Markets. The problem is most people over intellectualize markets. They're highly psychological. Investing is not like it is a mathematical financial thing, but it's ultimately, if you don't understand psychology, good luck. Like seriously, good luck. And present value is all you need to know about, like, how things should trade and building greater margin of safety. But you're still speculating. Like it's still, can other people understand? And sometimes, also I'll end with this, the other keys, what is it? Great quote, which is the market could stay irrational longer than you can stay solvent. And so that's why you never want to short in crypto.
yeah.
you know,
I
fool's
think the
errand.
I think the argument now is that it's not that there wasn't always people who wanted to get rich quick. It's that now that's the norm. Like, whether that dopamine culture has led to a society where everyone is in the same boat of, I will never be able to afford a house. I will never be able to do this unless I get rich quick. So I feel like the dopamine culture as it relates to investing is kind of like a valid progression.
It's also the age at which people participate in the markets has gone down, right? Old markets used to be stale, pale, male, like old white dudes, basically, who
Still
had,
pale male.
yeah, stale, pale, male, old white dudes on Wall Street. And then it became the, old, like maybe, moms and dads who in the 90s when you had like e-brokerages like TD Ameritrade and stuff like that came online, and now anyone with a smartphone can become an investor. And as you
Yeah.
go down in age, you also,
Yeah.
and you get more digital, you get more dopamine obsessed, and you talk to an 18-year-old, they're not interested in the 8% a year, right? So
Well, with that, folks, I got to drop. I'm late for a
good
call.
place to wrap.
All right, boys. Great chat.
Good
Matt,
pod.
thanks for joining
Matt,
us. It was
appreciate
fun.
you joining.
Yeah, thanks for having me. Appreciate y'all.
Hey everyone, thanks for tuning in to today's episode. Don't forget to claim your free Wormhole NFT exclusive to Empire listeners. Hit the link in the description of today's episode and fill out the form to claim your unique Wormhole NFT today.